reading, but any reading above 50 not only denotes expansion, those numbers are quite still very robust. 7 a.m. also have the U.S. construction spending data in July, so it's a little bit lagging data there, but expected to be up 0.3% month on month. Let's look at a few industry tidbits that I found. ThinkAdvisor is a digital website devoted to financial advisors. They picked up news that Fidelity Investments is planning to hire 9,000 new employees across the U.S. by year end, seeing record growth amid a surge in stock trading. And it's the third hiring push by this fund and brokerage giant in less than a year. New positions will focus on client interaction and technology. Now, quickly on through earnings, we're going to talk about CrowdStrike for sure, CRWD, one of the leaders in the security software space. They were down about 3% pre-market. Earnings per share beat the estimate by 2 cents and up 267% versus a year ago. It posted 11 cents in profit per share. However, it didn't beat the most bullish estimate of 13 cents. So my feeling is that given that CrowdStrike had this nice run up, maybe people wanted a really huge beat there. Revenue up 70% to 338 million. That number beat all of the top line estimates, and there are more than 20 to 23 analysts covering this company. CONN, that's Cons. It's a mini Best Buy, if you will, consumer electronics and appliance retailer. They were up 10% in the pre-market to around 27 on strong Q2 results. Earnings per share up 63%. The stock CONN forming a base with a 31% correction within that base, so very, very normal size decline. Anaplan, PLAN, last night they reported a bigger net loss, actually 9 cents a share versus a net loss of 4 cents a share a year ago, but their revenue growth accelerated up 35% to 144 million. That stock last check was up 15% in the pre-market to around 69 as it tries to build the right side of its new deep cup base that has some double bottom elements. Finally, PVH, this is an apparel giant. They have the Tommy Hilfiger and the Calvin Klein brands, among others. That stock was up sharply around 115. Huge earnings growth, $2.72 a share for the July quarter. Sales up 46% to 2.31 billion. They have a cup with handle base, and there's a 116.79 entry. After the close, we'll have at least 6 more key companies to watch out for earnings, and that's Asana, Chewy, Five Below, Okta, Semtech, and Viva Systems. The ticker symbols for those are ASAN, CHWY, 5 and Five Below, Okta, OKTA, SMTC, and VEVV. So there you have it. Ellie, let's get this show on the road.
Let's do it. Thank you for that in-depth roundup there. Now let's take a look at Thinkorswim from TD Ameritrade and provide a little bit of a look at what is going on in terms of overall market conditions. So Arusha, can you kick us off and talk to us about your exposure level, your approach this week, and your thoughts on where we're at in the overall market?
Yeah, I'm around 90% invested. I am getting a little nervous because we've had such a good run over the last couple of weeks. We're starting to get a little extended from the moving averages here, and there are times when you get extended that it comes back in pretty quickly. Now the problem is that, as we've known in the past, that sometimes it can go extended for a lot longer than we think, and then you get that snapback. So you can't really prepare for it. You just need to keep it in the back of your head. And when you do have some gains on some of these stocks, it's not a bad idea to lighten up. You might not have to close out the position, but lighten up. So here the market is acting well. I mean, this is the NASDAQ right here. And the NASDAQ went sideways and built this consolidation like for a month. It finally emerged out of it on a really powerful day. And it's continued. It's continued the way we expect the breakout to work. So that is good news. But it's still, from what I understand, it's still, a little bit more of a narrow market. this market is still really kind of saying, be in the large cap tech stocks, the stocks with that are part of the QQQs, because those are the ones that are doing well, while there are plenty of other stocks underneath the surface that have been struggling. But so yeah, those are just some of the thoughts I have.
Great. Scott, would love to get thoughts from you on this topic as we kick off today.
Yeah, I'm not as invested as Arusha. I think I'm like 50 maybe, because I tend to sell into strength, and you've had strength, and then you've had strength and more strength. So I've done some trimming and trimming and trimming, and that's the downside to doing it the way I do it, is you might get left behind as the market goes up. But I'll wait it out. It's a long road, and there'll be a better spot. I think it might be higher, but the risk reward setup might be better for me, where I can, manage my risk a little better. If I buy here, I'm just buying here because I want more exposure. And typically when I do that, it doesn't work. I'm just, I'm just feeling the pain of the strong market and feeling like I need more exposure. So I'm certain there'll be a better spot. Like I said, I don't know if it'll be at a lower price, but that's fine. I just want more of a risk reward, closer to the moving average, like that, that 50-day, like, you see how it undercut that 50-day, and supposed to go lower right there. And it can't even go lower for one more day. It's such a great signal at that point. So you can be aggressive buyer the next day, right? I'm not saying it's not easy, but that's what I'm looking for, something like that.
Well, that was definitely our mindset at the time. Okay, so you feel like there's a better spot than right now to be adding exposure. Well, we'll see how the day and the rest of the week progresses, and what setups are out there that are looking interesting. But in the meantime, Dave, I want to go to you and get your thoughts, because people are asking us the exact percentages,
Sure.
just to remind us that we need to look out for when it comes to the market being extended. We did have QQQ, which tracks the NASDAQ 100, close yesterday about 4.4% above the 50-day moving average.
Yeah, good point there, Ali. And I was just looking at the NASDAQ composite itself, and I think, notwithstanding what's going on today, I think we closed about 4% above its own 50-day moving average. So getting up there, but not in a very near-term overextended region like we saw back in February. On February 12th, the NASDAQ was 7.7% above its 50-day moving average, and even more so back in September of 2020, that was 11.6%. So in other words, we could see a further run up, and when that happens, very curious to see how everyone's stocks are behaving, and are they at levels where you want to take at least some gains at 20%, 30%, even more. I do want to note that we have 67 stocks on the ready list, and that's up a little bit. I tried really hard to find stocks to remove from our very own live ready list, and the only one I could cut was AZO AutoZone. And the reason for that was Chris Gessel and I, the Chief Content Officer, have a kind of a new, very strict rule regarding the ready list, and it's if the stock is trading more than 2 to 3% below the 10-week moving average in this current market, given that the indexes, many of them are at highs, that's a sign of weakness. So we're trying to really keep that ready list trimmed to almost perfection, and that it really has names that are ready to go, either follow-on buy points, swing trading entries, or genuine breakouts.
Okay, thanks for that added context there. And let's kick off with CrowdStrike. Scott, CRWD, you wanted to highlight this one. I'll flip on over to the daily chart. So earnings are out, and it looks like it is down a bit. So it's extended here, but if you have an existing position, is there anything that you would be doing with it at this point?
No, the nice thing is you